Assalamu alaikum wa rahmatullah. Welcome back, viewers, to another episode of Pathways to Prosperity. And today, alhamdulillah, we have the CEO of FNB Islamic Banking with us, Amman Muhammad, and we're going to unpack two key products that we as consumers would engage with on a day-to-day basis: a Shari'ah compliant home loan and a Shari'ah compliant vehicle and asset finance. Amman, assalamu alaikum wa rahmatullah.
Wa alaikum salam.
Jazakallah khair, thanks for coming through. Amman, these two products, I suppose if you take the average consumer across South Africa, these are the two things that we possibly spend the most amount of money on a month-to-month basis. And many of our consumers want to ensure that it is Sharia compliant, and sometimes they find difficulty in understanding the complex structures of our Sharia products. So maybe let's start with the easier of the two, in my opinion, the vehicle and asset finance. Most of the banks in the country structure it on nearly the same structure. Let's talk through how a vehicle and asset finance product works.
Thank you, Ameen. Interesting choice as well of products. These are emotional purchases. When it comes to acquiring not just your first home, but any home, it becomes an emotional decision. And similarly, we know how our community love their motor cars.
Yeah.
So it also becomes an emotional opportunity, to acquire something that you've been looking for. And I think with the advent of the introduction of an Sharia compliant vehicle finance option, if we're going to start with that one, is that the good news for our Muslim community is that there are a few options that are available where Muslim customers, and also not just Muslims, anyone who chooses, can finance the vehicle of their dreams, the vehicle for their children's first university car, or maybe a second car, or even a vehicle to be used in the business using a Sharia compliant structure. And I think for a long time, there's been a misconception that if I finance my vehicle using an Islamic means, then I'll be paying more for that.
Yeah.
And I think, that's an important conversation that we should have, because it's not necessarily a correct view that many of the customers have. And if I may, if we really go back before any specific tax considerations were given to the Islamic financing structure, there may have been truth in that taking up an Islamic deal pre-2010 could have costed you more, because our macro legislation was not equipped to deal with any type of Sharia compliant structure.
Got you.
But now in 2024, the situation has changed remarkably, and alhamdulillah, there are many structures that are now recognized in our Taxation Act, and the underlying structure that most of our Islamic banks in South Africa are using is what's known as an ijara structure.
Okay.
And I think in simple terms, I like to cut through the jargon. It's a leasing type structure.
Okay.
To make it easy, for our viewers to understand. And it's become so easy that if you choose a particular vehicle at a particular dealership, you have the option to notify your bank that it is your intention to acquire this vehicle, financing it using an Islamic Sharia compliant means. And even the finance and insurance specialists at the dealerships are fully aware of the Sharia compliant options that are offered by the various banks in this particular structure. So, what does all this really mean for the consumer? The minute they have made the conscious decision to go with a Sharia compliant option, and the notification is made, we have various structures that are either electronic or manual. And with the bank that I represent through our West Bank structures, if a customer just simply goes onto the app and does an online application, within 10 minutes, on condition that you have all the documentation that's required, you could be automatically approved for the vehicle that you're looking for. And the flexibility in this structure is that the customer is able to choose from a variety of terms. So if it means that the customer wants to pay the car off over 2 years, they're able to do so, or if they choose to pay it off over 5, or even in some cases 7 years, the option exists. And then I think with that, there are, on the financing side, the option, some of the banks offer a balloon option, where a certain amount is set aside and the monthly repayment is a shorter repayment, but then upon sale of that vehicle, the customer is expected to settle that portion of the balloon.
So, Amman, you touched on a few elements there. I think one is the pricing, that it's on par with the market. The second is most of the banks offer a Sharia compliant option that they can consume from the FNIs on the dealer floor or directly from the bank. And the third one is structurally, from a Sharia perspective, it's very close to what we would call a leasing structure. It's essentially the customer is almost leasing it from the bank, and then a sale takes place at the end of the transaction. But what I want to touch on, and I think it's a very, very important thing before we move to the home loan, is you touched on the 2010 tax law changes.
Yes.
And the challenges that we had as an industry prior to those tax amendments coming through. And obviously yourself and a few of our colleagues in the industry have been around for longer than we have, and you guys would have worked through with the relevant regulators and legislators through that. Maybe for the benefit of our audience, speak us through some of the challenges that we did face as an industry prior to 2010 and what it did after the amendments came through.
I mean, these are very relevant considerations, and at a macro level or at a legislative type level, Islamic financial structures were never really considered from a pure legislation perspective. So an ijara product that we talk about, or a diminishing musharaka, which underpins a typical home loan type transaction, was not recognized in South African law.
Yes.
So, for our accountants who are listening, in a simple IFRS differentiation between recognition of income, a profit-driven transaction had no standing in current, in South African legislation at the time. So with the advent of Section 24J, which is the Income Tax Act that officiates over these types of transactions, the ijara, interestingly enough, was one of the first underlying structures to be included and to be recognized officially for the first time. And what that meant was, as Islamic banking practitioners, we aim to get to a level of parity with conventional products that we serve. So even at a tax level, the Islamic consumer is never prejudiced or disadvantaged by choosing an Islamic banking product. And I think what Section 24J did was that it achieved the objective of leveling the playing field. So a Muslim customer choosing to finance a motor vehicle, or any customer for that matter, using a Sharia compliant means, need not worry that I'm going to be priced more because of tax legislation. And if a situation does occur where your friend or your neighbor happens to get a better rate than you, there's another consideration when it comes to credit transactions. At the end of the day, as Islamic banks, we custodians of Islamic deposits. And these Islamic deposits are then utilized to acquire assets to fund the motor vehicle purchase that our customers look for. And I mean, you like me, our primary objective is to safeguard the Muslims' deposit funds.
Absolutely.
So when we decide on what is a suitable rate to charge a customer, it's based upon the risk profile that the customer who's choosing to finance a vehicle brings to the bank. And I suppose it's a more of a light-hearted comment, but risk has got no religion. And unfortunately, we do have situations where even Muslim customers default. But we have to factor this in in terms of arriving at a price.
Yeah.
But having said that, and all things being fair and looking at level playing fields, in short, if a Muslim customer or any customer is looking to finance a vehicle using one of our structures, they will not be prejudiced by taking up an Islamic financing option.
Amman, I think this is an important thing because as an industry, we've been chatting around this for a while now, is that there still exists this myth that Islamic finance products are more expensive than conventional products. And I think what you putting very nicely to our viewers today is, yes, that may be true, but prior 2010, when we didn't have the tax regime to allow for parity. But now that is solved, for at least for most of the transactions that we conclude, pricing is now risk-based pricing, profile-based pricing.
I mean, another important point to just factor in is that the level of sophistication on Islamic banking systems 14 years ago were not as sophisticated as they are today.
Correct.
So, the whole element of processing a transaction, of fulfilling on a deal that was given to a customer didn't exist 14 years ago.
Correct.
And I think what we need to do is, we have customers who have long memories, so unfortunately are basing certain experiences on previous bad experiences.
Yeah.
And the best, what they say, the proof is in tasting the pudding, right? So test us.
Yeah.
Approach your Islamic bank that you deal with.
Yeah.
Request a quote.
Yeah.
Some of the banks, as I mentioned, you can go on your app, filling a form, and you'll get either approved or hopefully not disapproved.
Yeah.
But it's something that you should try for yourself.
Yeah. Amman, thanks for that. I think moving from that into the home loan, I suppose it's possibly the single biggest purchase that the average consumer would ever make in their life, and it takes nearly a lifetime for them to pay it off in our current economic environment on a traditional sort of 20-year amortization. In this big decision, I suppose the consumer would definitely want to know what they're getting themselves into. And maybe in a few minutes, explain to the viewer, how does a Sharia home loan work? It's such a big part of our life. We want to know how it works from a Sharia perspective.
I mean, for a long time, we had a certain sector of the Muslim community who would opt rather to rent than to own. And when one really starts unpacking, I suppose almost at a philosophical level, the element of ownership also increases your net worth to a certain extent. And, it just allows you a sense of ownership for property, which I think is a basic human need and requirement. And we respect, those people who opted not to purchase because there was no suitable option that was available. And I suppose a decent segue into this conversation around the perception that existed pre-2010. The home loans is probably the best example on why costs were more elevated than what you would see today. So in a typical Islamic transaction, the customer would identify a property, a home that he or she would like to acquire. They would then notify the bank of their intention to acquire the property. According to a very simple Islamic structure, and the reason I say underlying structure, because the Muraba principle was applied at some point, where it's a cost plus a markup. And then later, the diminishing musharaka structure, which is a far more popular structure, is being deployed. And we'll talk a little bit about that. So what happened was, that customer would then notify the bank. The bank would perform the necessary credit checks. And if the customer had qualified, the bank acquires the property. Now, to make it absolutely clear, I'm giving a scenario pre-2010. Stamp and estate duty would then be paid by the bank because the property
had to
technically transferred into the bank's name. Then, in order to finance the transaction and pass it on to the customer, that same property needed to be registered for a second time in the name of the customer.
Yeah.
So what it did was it automatically doubled up on the estate and stamp duty.
Yeah.
And in the old days, the bank had passed the total double stamp and estate duty onto the customer.
client.
So it automatically made the deal more expensive.
Got you.
With the advent of the new tax law,
Yeah.
specifically looking at diminishing musharaka and murabaha contracts, the double tax leg was dropped.
Okay.
And there was a lot of consideration that went into this particular structure, where our South African government also consulted with the United Kingdom government, who had just gone through a similar tax change. So it was well considered. It was specific to the requirements of the underlying diminishing musharaka structure. And I think, this is an important point that potential home buyers or someone who's looking to finance a house using Islamic financing structure should take into account, because this is another example of leveling a playing field from a pure tax perspective.
So the diminishing musharaka structure, what we understanding, we used to use murabaha, which was a simple buy and a sell. I bought a house and I sold the house to you at a profit. The diminishing musharaka now, we would assume is different to just a straight out buy and sell. So what would, at least theoretically, what does that structure look like?
So some of the simple mechanics is the bank and the prospective home buyer combine forces to acquire a property.
Right.
The diminishing musharaka structure is unique in the sense that it actually creates equity in the underlying house.
Right.
So, like any good partnership, the two parties will assess what is the most equitable way in order for the home to be financed. So here, once again, the bank will assess the customer's financial position and will also look at the bank's position in taking an equity stake in the underlying of this particular home. So, you would hear terms like loan to value or LTV. And if the bank deems that the customer's credit portfolio was good enough, they would come up with a suggestion that either the customer puts in 10% of the value of the home and the bank would then provide 90% of the value of the home. And this ratio can vary between, 90-10, 80-20, 70-30, all depending on the credit profile of the customer and also the customer's ability to repay the monthly repayments. So once we get to a point where it's been agreed between the bank and the customer, the ratio that each will be participating in the acquisition of this house, at the beginning of the contract, the bank would naturally own a larger stake in the house, and the customer would own a smaller stake in the house. Now, there are few options that are offered by different banks, where some banks would enter into a sale of equity, which is conducted on an annual review basis, where the bank will systematically sell off chunks of its equity to the customer, and hence the term diminishing musharaka, which means partnership, where the bank slowly will pass its share of equity onto the customer. Some banks would then lease the bank's portion to the customer, co-joined with a sale contract.
Right.
Other banks have reviewed the contracts and said, we remove the leasing of the bank's portion and we simply will just sell chunks of equity to the customer over a designated period. In the start of this conversation, you mentioned 20 years. Some of the banks are even offering 30 years now. So it makes it more affordable. It assists with your cash flow position. And essentially what then happens is that once the Islamic bank and the customer agree on a suitable term, over the life of that term, the customer on an annual basis will be contracting with the bank to acquire chunks of equity, which would result in the end of the term where the customer holds all the equity in the underlying asset and the bank will hold nothing. And at that point in time, there will be a full transfer of ownership from the bank to the customer in its entirety. And then also, I mean, what's been interesting in terms of innovation around the structure is that most Islamic banks would offer a facility that at any point during the term, if a customer required more money for, say, alterations, or now what's topical, putting up a solar panel, or, you know, expand or doing up the kitchen, the customer is at liberty to sell
back to the bank,
their equity back into the bank, and then we recontract with the customer, allowing the customer access to more cash.
Amman, thanks for that. I think we're going to round up, and I'm going to do my best to try and summarize our discussion. I think for our viewers, the first is, yes, there was this myth that Islamic finance products were more expensive. That has been eradicated with our guest tonight, because we have the tax laws that now make the pricing of these transactions the same. And then the second big one for me is both on the home loan and the vehicle and asset finance product. You have products that are Shari'ah in nature, equitable in nature, have the asset as the subject matter of the contract, and we've created sophisticated means through which you can consume these products in a Sharia compliant way. Amman, Jazakallah khair for coming through. Until next time, Assalamu alaikum wa rahmatullah.